Since the beginning of 2023, the stock market has been doing really well for 6 weeks in a row. If we take a look at the major index, the Dow Jones Industrial Average is up about 3% year to date. The S&P 500 went up for almost 9% year to date, and the Nasdaq Composite rose more than 16% year to date. Everything just happened in a month. Some people may start asking these questions. Are we returning to a bull market now? Did I just miss the first round of the uptrend run? Personally, I think it is too early to call it the end of a bear market. But obviously, investors are definitely very hyper these days. Here's a chart overlapping the S&P 500 index and the VIX, which is a popular measure of the stock market's expectations of volatility based on the S&P 500 index options. As we can see, the rate of VIX has fallen into a relatively low range, which we would normally see in a bull market. Many investors are quite confident on the recovery of the market at this point. Where more and more people start thinking about putting more money into the market in fear of missing those opportunities, I would suggest take one step back, focus on the data and the facts. Use your best judgment to evaluate where we are before making any emotional decisions. Now let's talk about facts. In this chart, the blue line indicates the CPI data and the gray areas represents the period of time when US economy was in a recession. Back in days when the CPI reached a peak, in most cases, it is likely to see a recession. And just FYI, we are here right now. In this second chart, it shows the relationship between the unemployment rate and the US economy throughout time. Again, when the unemployment rate hit the bottom, we often saw a recession. And right now, we have the lowest unemployment rate since 1956. I'm sharing those charts not saying history will definitely repeat again. Every time the economic environment is different. In fact, according to Chairman Jay Powell, the Federal Reserve is confident to achieve a soft landing for the US economy this time, which I hope will eventually happen, so less people will suffer from the recession. But those charts are still good references, alerting us what could occur in the worst case scenarios. The Fed has been doing rate hikes for more than half a year. Maybe not everybody has sensed its influence yet. That's because there is usually a lag between the time the monetary policy got released to the time the policy actually makes a noticeable difference. Here's a list showing how many people got laid off by those big tech companies over the past few months. If thousands of people making six figures start losing their jobs, definitely economy is going down. Now, after seeing those charts, do you still believe the market is gonna rocket up? In my opinion, we will likely see another fall sooner or later, or maybe multiple rounds of ups and downs. You may ask how low or how high the market will go this year. I don't really know. As an investor who doesn't have a strong financial background, I had to admit there's so many things about the market that I don't really understand. With that in mind, I tend to be very conservative when it comes to investing. First, I will never ever try to predict the market. Secondly, I won't aim at making a lot of profit in a short period of time. Rather, I will always focus on the long-term return. If you ever watch my other videos called Index Fund ETF Challenge, you will know I'm using dollar cost averaging method to lower the average cost of my shares and build my portfolio. If you are new to my channel and interested, please take a look at the series. I will keep updating my portfolio every week. Now, if the economy will be struggling for a while, when will be the time for us to expect the turning point? A milestone will be the moment when the Fed starts rate cut. Based on the most optimistic forecast from Wall Street, the first rate cut will be expected to happen as early as in December 2023, which means most likely we're going to live in this high inflation environment for at least a year. So if you are planning to invest in 2023 before taking any actions, always remind yourself the inflation rate won't go down to 2% in a few weeks. Those people who just lost their jobs at Google won't get positions back next day, and the stock price won't bounce back to its record high overnight. The economy just needs time to recover. Don't invest too aggressively, be financially responsible for yourself and your family, and make sure you have a long-term investment plan that can survive throughout 2023. Lastly, I want to underscore that I'm not a financial advisor. I share my thoughts and the things I learned here just to provide a different perspective to those entry-level investors like myself who want to learn more about investing. If you feel this video is helpful, please consider subscribing to my channel and hit the like button. Of course, you are more than welcome to leave your comments and thoughts below. My goal is always learning, sharing, and growing with you. I'll see you next time.